What happens when Travis is traveling and won't be back in time to record a show? That's easy. I take over and release an episode anyway. You see, last week we had the opportunity to speak with Alexander Kravets, the founder of xtrade.io. It's a platform that promises to bring advanced financial technologies to the cryptocurrency markets. And through the miracle of past recordings, you might just hear an appearance or two from Travis. So welcome to the Where's Travis, episode number 58 of the Bad Crypto Podcast.
I'm going to go drink some Jack Daniels.
5, 4, 3, 2, 1, 0, ignition.
Who's bad?
Welcome to the Bad Crypto Podcast, the show for the crypto curious and the crypto serious. I am one half of the blockchain blockheads. And as I said, Travis isn't here, or is he?
I totally stole your content.
That's right. And we're heard in 176 countries around the world.
And I can tell you they did not hack these statistics.
Please do follow us, subscribe, and shareify. We like when you do that. Also, pleased to announce that our show sponsor for the month of December is once again the Zilla app. You guys already know about the Zilla ICO Marketplace app. We've been talking about it. And you can browse the ICOs. You can upvote, downvote, sideways vote. Well, you can't sideways vote. But if you like ICOs, you're going to be able to participate in them using various tokens and credit cards with a one clickety-click. And unlike many of the ICOs, the Zilla team believes in actually shipping products. So they're releasing the beta app, which should be in the Apple App Store shortly. They're working on wallet functionality. So you won't be able to participate directly from the app yet, but this will give you a feel for how the app's going to work when it is fully ready. You can go check it out at zla.io/bad. I wonder what Travis would say about that.
Pretty sweet. So that is great.
All right. Well, as I said, we had the opportunity to sit down, and by sit down, I mean record via Skype with Alexander Kravets. He is the founder of xtrade.io, doing some cool stuff that could be really interesting in the financial markets to help those of us that are trading crypto. So with no further ado, unless Travis has something to say,
I'm going to go drink some Jack Daniels.
Well, let's get to the interview. Travis, we just get the best people, don't we?
We consistently get amazing people on the show somehow. How's this work? How's that happen?
Yeah, you came upon a list of some of the top blockchain influencers in the world, and this guy's name came up, and we had to check him out. We had to do some background checks on him and, see if we could hack his crypto wallets, and all that. And he passed the muster. His name is
very nice.
We've got Alexander Kravets with us. He's the founder of xtrade.io, and Alexander's got a big background in day trading. He did it for over 12 years, been very successful at it. He's got a really super long bio, and I don't want to bore everybody with it because we just want to get to talking to him, and we'll discover more about what he's all about. So welcome to the Bad Crypto Podcast. Alex, how you doing?
Awesome, guys. Thank you so much for having me. Love to be on this podcast, and I'll give you a little bit more of a background about, what I've been doing for the past 12 years, I guess. So I actually started as a proprietary trader behind a supermarket in Flushing, Queens, right around 2001. That's kind of how everything began for me, and I was a prop trader for about 3 years. And as we started trading, we started building tools, for ourselves to trade. And then we figured out that these tools are actually really cool tools for other people to use to trade with us. And so we became a clearing firm, a broker-dealer. We started providing trading platforms, VPS services, all that kind of stuff. And then it just became this big thing where I ended up wearing like 47 hats and just being pissed off every time they gave me another one. It's just like, hey, give me a little bit more. But anyway, the cool thing there is that I learned a lot. And that actually kind of came back with me when I started trading crypto about 6 months ago. And I really saw the need for creating an infrastructure similar to what we actually did in the equity space around the crypto space as well, because there's a lot of issues in the crypto space that need quite a bit of fixing. There's 16 individual markets. Things trade like crazy prices between them. Like the other day, Bitcoin Gold was trading at a 500% difference between multiple markets because HitBTC was getting DDoSed. And then not only that, but if you tried to access HitBTC, you would get redirected to a phishing site. And then you couldn't even get your Bitcoin Gold out of that market. And then from there, If you trade it somewhere else, you'd be able to buy and sell it for 500 as opposed to 160. So just all these things are really, things that are very interesting to me. And I feel that the solution for that is what I'm doing, which is basically to create a situation where we normalize access to these markets through a fixed API, through a front-end platform that aggregates all the market data so you can see it right away where everything is and trade on it, and also to create liquidity pools at all these exchanges so they can actually trade without having to open 97 accounts in Chinese.
Right.
And I think that's very, it's just crazy.
For
I remember
sure.
one time I was opening an account, and like in one hand I had to hold my photo ID, another one I had to hold a signed written statement that I was opening an account at the exchange, and then someone had to take that picture. And only have two hands, and that's like the KYC process for one exchange. It's just out of control. So I'm just trying to kind of normalize that a little bit and bring a little bit more sanity to the space as far as that goes.
That's great. So you can tell that from traditional financial markets, right? You just mentioned that right in the pre-interview that you've just gotten off of the New York Stock Exchange floor, right? So it's a totally different world between trading in stocks and whatnot, and then trading in cryptocurrency, right? So what are some of the differences that you've noticed, and what are some of the ways that you've been able to maybe optimize some of these processes to make it simpler for people?
Sure. Yeah. So the stock exchange is actually interesting because right now it's actually a museum. It's more of a marketing piece than anything else, because most of the trading is done in like data centers in New Jersey, in Mahwah, which is not as sexy, I guess. Sure. And so the way that trading actually works in the equity space is that there's different networks, just like different markets. So you have Bittrex, GDAX, all those different Kraken, all those exchanges. But the problem is that every time you have a trade to go off in Bitcoin, it doesn't connect to the others, right? So that's why you have Bitcoin trading at different prices, because it settles internally within each exchange, not on the public blockchain. When you compare that to the equity markets, each exchange works together. There's actually a law called Reg&MS passed by the SEC in like 2004. So if you send an order and there's a better price somewhere else, your exchange will reroute the order for you to the best available price. You don't have that in crypto. And the problem is that because you don't have that, you have all these crazy price differences. And obviously, it's great for arbitrage if you can open multiple accounts on multiple exchanges. But for the layperson, you're just paying way, way more than you're supposed to for these assets. And so the equity markets are very efficient now because you have all these infrastructures, cross connections to the point where people are trading with nanosecond latency. We have a hard-coded logic motherboard in order to trade, where you have GPS satellites timing your execution. We actually have a project we're running, with the CME right now on that. But on the crypto side, it's just like archaic, like Stone Age type stuff, where it's like 1997 and you're just opening like a Daytech account and you can't send a stop order because the system doesn't support it. And it's crazy. So I see the crypto markets as expanding like greatly. We're looking right now 300 billion market cap, and it was like 200 billion a few months ago. And beginning of this year, it was like 17 billion. And as that market cap grows, as trading becomes more and more prevalent in these markets, they need to upgrade their infrastructure, and we need to find a way to connect them, because decentralization is really cool because it eliminates a trusted party, and all the evil stockbrokers disappear, and that's awesome. But the problem is if you do that, the exchanges don't talk to each other. And so we can open the centralized exchange and you want to buy an NEM token for an ARC token, and that's awesome. If you're not there on the other side of the trade with that NEM token, you can't do the trade. And you have to be able to go out and actually get that trade somewhere else. So I'm kind of creating a centralized solution to a decentralized problem, if you will. I think crypto is awesome. I myself invested in multiple ICOs. I trade crypto. I love it, but there has to be a better way. And I think that what we're doing is the way to do it.
Yeah, you wrote a piece on Medium. You don't hide your feelings at all. It says the crypto markets are broken.
They are.
And clearly this is something that needs to be fixed. And I see how you intend to do that with X-Trade. Let's talk a little bit about regulation and how you see that coming our way, how soon and how deep, because right now it's still very much the wild, wild west.
Absolutely. So the first thing is obviously some of the tokens that are trading now are potentially securities because they connote an ownership interest or a dividend as opposed to a utility token, which is what I'm launching. And so what the SEC is likely going to do is what they usually do. They make an example of somebody. So they're probably going to go after one of the exchanges that facilitates trading in these tokens that may be deemed securities and tell them that they have to register as a securities exchange. And that's going to drive a wave of voluntary compliance, which is actually kind of a good thing, where some of the exchanges begin to register as exchanges or begin to list security tokens or actually
Alex, just so people understand, why don't you just name a few that would be considered security tokens?
I would say the DAO is a great example that the SEC came out with a year ago. That would be a security token. So it was actually released as a regular utility token, but because it confers voting rights, because it's ownership of an organization, that would actually be a security potentially. So security tokens are voluntarily tokens that are created to say that these are actually securities and they're sold through a securities offering and they actually actively denote interest in a particular project, as opposed to utility token, which functions as a way to power the network, where it's actually utility, where you're using the token to pay for services on the network. So
Which is the bulk of ICOs these days, right? They're utility tokens.
Potentially, but some of them may be construed as securities tokens based on what the SEC does. But the point here is that the SEC and some of these other regulatory entities might want to create frameworks for exchanges to follow. And what's going to happen there is a little bit more transparency, a little bit more accountability on the part of these exchanges. Like, for instance, when I run a customer service desk at a broker dealer, somebody called me, asked me, where was my money? Send me 50 grand. I'd have to immediately respond and send that guy 50 grand the same day. Obviously, nothing else could be considered normal. In the crypto space, it's weird. Like, for instance, a friend of mine was trying to get 140 grand out of Coinbase. Took him like 90 support tickets in 2 weeks. Nobody would pick up his call because he can't even call. They have to send a support ticket. So all these issues really accumulate to make it kind of a negative experience. A lot of friction to getting fiat into exchanges and actually converting them to crypto. So what's going to happen is you're going to see somewhat of a wave of compliance, voluntary compliance come through. And a lot of these exchanges will begin to do that, will become more transparent, will register, will follow more of those regulations. And by doing that, they're actually going to be more attractive places to trade because they're going to have more price discovery. They're going to have better prices. They're going to have more liquidity because institutional players really drive a lot of these markets. And when that money starts coming in, that's when the spigot opens. And they're going to go to the exchanges that actually facilitate trading in a way that is a little bit more regulated and a little bit more transparent and a little bit more accountability there as opposed to what there is now. And I see that happening, obviously, initially in the U.S. exchanges. But I think you'll see that down the line in Europe and Korea and Japan. And, you'll still have some that are unregulated. But I think that what's going to happen is eventually the liquidity is going to aggregate around the ones that are more transparent, that have better infrastructure. And that's another big problem, right? So infrastructure, these exchanges were built by blockchain engineers, right? They weren't built by financial guys. So when you have an exchange that's built for trading, a few hundred million, or maybe a few million or whatever it is, then it jumps dramatically to like $1 billion. You're going to have a lot of problems in the matching engine. You're going to have a lot of problems in the support side. And so the infrastructure also needs to be upgraded. And that has to happen. If the exchanges are to survive in these volumes, they're going to have to upgrade the infrastructure. And we see that happening as well.
So last part of that question, and then I'm going to toss it to Travis, is time frame. We know the government moves very slowly. How long before you think this is, we're going to start seeing a crackdown?
I'm not in the SEC. I don't know. I don't have a magic ball, but I think beginning of the first quarter of next year, you're going to see some sort of actions coming through. And again, the SEC, the way they do things is they kind of try to make an example because they don't have the resources to go after everybody. It's just ridiculous. They'll probably just go after the bad actors, which is what they've been doing. But just creating more transparency and accountability in these exchanges, I think, is very important to create more of a public trust. Obviously the crypto space is very screw the man, and everybody wants to kind of just trade with each other, and that's awesome. But if you really want these markets to grow, if you want Bitcoin to trade at more than like 1,000 point spread, you really need to kind of create more liquidity, more transparency around these markets, and that's when institutions are going to really facilitate, I believe. And you need to have systems that actually help them do that. And that's kind of what we're building.
All right, Alexander, I got a question about this. So when you're talking about the multi-market setup and when you're talking about one exchange giving you access to all of these exchanges, are you creating an exchange that's going to actually talk to all of these other exchanges? And that way, eventually, all of the prices are going to get on board, and sort of like what you were talking about originally with the stock market. So if there's a better price, is that what you're trying to set up? Or are you basically setting up an exchange that will just give you access to all those exchanges you guys are trading with? That way you get the best prices whenever you're trading. Or are you working to help all the exchanges communicate with each other?
Cool. So what I'm actually doing is not creating an exchange. I don't want to be an exchange. I don't want to take people's money. We're a technology company. And what we're doing is we're partnering with certain exchanges and we're opening accounts at others. So imagine an exchange that is a partner of ours, and you have an account at that exchange, and you send me an order to trade at exchange B, which you don't have an account in. So I'll go out and I'll do the trade in my own account at exchange B. I'm going to bring it back to exchange A, to your account. And I'm actually going to take the counterparty risk because you don't have to open an account at all these exchanges to do that. You just have to open the account at the one that we're partnering with. And so what we're doing is we're kind of connecting these liquidity pools together by using our own liquidity, our own accounts. And so what happens for you is that you get access to all these exchanges without having to open accounts, and we will do the trade for you. And we are partnering up with a few of these exchanges to do that, but we don't have to partner up with all of them, just a few. They're really like that because for them, it's a huge added value to have their clients be able to trade everywhere else. Some of them may be a little hesitant because it takes volume away from them, but in the aggregate, it gives them a lot more capital flow into their exchange. And obviously, there's cost sharing agreements with them as well. And it benefits everybody. And imagine you can trade Bitcoin across 10 markets with one account. The price of Bitcoin is going to be a lot more stable, and there'll be a lot more liquidity on the inside. It'll be a lot easier to transact. And that's going to just create a lot of value for the entire world to trade crypto and make it a lot easier to do so. And that's kind of the vision that I have. And that's kind of like comparing it to what I mentioned earlier in the podcast about Reg NMS, where if you send an order to one exchange, it'll reroute it to the best price at another exchange. I will do that for you. I will be the voluntary Reg NMS that will actually do that trade and bring it back to you at your parent exchange. That's our vision.
He's personally going to do it for you, Travis. He's going to pick up
really
your trade.
I've been wanting somebody to do that for me. That's going to be so helpful.
Yeah, I got our Ledger and NOS. I'm going to just fly around all day and just trade, get a helicopter maybe. We'll see what happens with that.
That's so nice of you, Alexander. That's so friendly.
I'll do what I can to help. But it's totally needed, I think. And, it's going to be a good value for everybody. For sure.
So this is one way to bring stability to the markets. Now, I've just got a general philosophical question, really more looking for your opinion. This whole Bitcoin Cash thing. Some are saying that Bitcoin Cash is better and should be the real Bitcoin. Others are saying it's a coup. I'm seeing conspiracy theories posted that the Chinese investors have a plan to pump Bitcoin up to 10,000 and then to do a major dump on it all and crash it down to 1,000. What do you think about what's taking place in the Bitcoin space and what's real, what's fake?
I think a lot of people realize that a lot of the Bitcoin holdings are controlled by a few individuals. I think what we saw recently with Bitcoin Cash was, in fact, a pump and dump where they literally pumped Bitcoin Cash from where it was, I think $600, I forget exactly, down to up to $2,500 and back down. And I think somebody made a couple of $1 billion doing that. I'm not going to say who it was because it's kind of a podcast and it's public information, but I can tell you that there's a lot of bad stuff happening in the space.
Could it be Satan?
Satan by another name, perhaps. But that's the problem. There's no accountability, right? You can do whatever the hell you want. If you want, you literally have Telegram pump and dump chat rooms with 15,000 people. Everyone's like, all right, on the count of 3, we're all going to pump this thing. Ready? 1, 2, everybody buys it. And then they go somewhere else, another chat room. And then the last guy holding the back, the last guy who's not going to sit down in the last musical chair loses, right? And that's obviously highly illegal in the U.S. market, along with insider information and everything else. But in the crypto space, everybody just does whatever they want. And it creates these huge abuses, especially when you have large players that control a lot of this liquidity. And it's so easy to move it, right now with just, a sizable order and because of the liquidity issues and the fact that exchanges don't communicate, that this problem needs to be fixed. And the only way to really fix this problem is to shine a light on it. So by aggregating all these quotes into one place and be able to actually trade against them, you'll see what happens. And when you have a hedge fund that has, $50 million, order out there that's able to trade between multiple markets, you try to pump and dump, the guy's going to short and long on the other side of it. He's going to kill you. And that's how it's going to work. Market forces are going to be able to control this, but the only way that's going to happen is if you have an infrastructure strong enough to support those forces to do so.
Well, the concern is a lot of people get hurt along the way. What do you think of this theory that the move up to 10,000, which is going to probably happen? I would say if it hasn't happened, I'm not sure when this interview is going to air. It could have happened already. I don't know. But is it possible for a flippening to take place, in your opinion? Is manipulation at the, forget the small coins, the altcoins, which can be easily pumped. I'm talking about Bitcoin itself, the big B. Can it be pumped up artificially to a point where a number of big, whales could then bring it down and a lot of people lose a lot of money?
Well, Bitcoin's pretty resilient. I mean, I'm looking at it now. It's like $150 billion in market cap, And so even if it does move up or down based on pumps, it's going to kind of go back to its original price. And what's really going to happen is that you're going to have a lot of capital inflows over the next couple of years into crypto, which is going to normalize the space. It's going to make it harder to move those coins. I mean, if you think about it now, if you look at it like an early adoption curve, right? It's defined as 2.5% as being the early adopters. And with crypto, you're at like 0.2% of the entire world. You're 10x just in the early adoption, right? And just thinking about how many Bitcoins there are, there's 16 million minted, 4 million of those have disappeared somewhere. Somebody lost their notebook or their hard drive, and it's going to take about 120 years to mint the other 4 million. And so you're having a situation where there's an asset that attracts so much capital because it's viewed as a hedge against gold, a hedge against currency. It's non-inflationary, and it's basically a store of value. And I think as capital inflows begin to this space, the price movements will become a little bit more stable as far as being resistant to pump and dumping. But again, the trading infrastructure has to be able to be there to support that process.
I want to ask you this here because it's fascinating to me. Like right now, Bitcoin has a dominance of 53.6% in that $300 billion market cap. Now, as more money gets poured into this space, right, and we're talking, it would seem to me by the growth that we've had in this year alone, next year sometime in 2018, we're going to hit $1 trillion market cap, if not higher, right?
Yeah.
And it would seem, and it would seem to me that if Bitcoin dominance is between 40 and 50%, we're going to be looking at a price of Bitcoin at around $25,000, $30,000 a Bitcoin.
Right.
That's crazy.
Why is it crazy?
It just seems amazing to me. It's like it's crazy in one hand because here we are. When we started our podcast, Bitcoin was at 1,800, and here it is knocking on $10,000 door. And then next year it's going to be 25, 30,000, and then 100,000 after that. And it's just the craziest investing train that I've ever seen in the history of man, potentially.
Yeah, I mean, again, just on like that early adoption curve, we're talking about 10x. From now, it's $100,000 off the bat. I think in a year or two. It can definitely happen. You're going to have more offshoots, and the craziest thing about Bitcoin that I've seen is that when it creates like a fork where you have a dividend like Bitcoin Cash or Bitcoin Gold, it doesn't trade what we call on Wall Street ex-dividend. Like usually when you have a company that issues a dividend, the stock trades lower based on the amount that was issued. Mm-hmm. Now with crypto, it literally just like free money. Here's some more free money, and people just keep buying
thin air.
Yeah, it's literally $15 billion. Like, here you go, $15 billion based on nothing, based on the fact that miners didn't agree on how many, decimal places should exist. And then it's crazy, but that's what's happening. And people
it's kind of like fiat currency. They just turn it on. They just print as many as they want. Cost 6 cents a piece to print $100 bill. It's like money out of thin air.
Yeah. Well, that's, the reason why people are buying Bitcoin also is because it's actually, inflation hedge, because a government can just print money like in Zimbabwe and Venezuela, or even in the US, we have a $20 trillion debt now. Mm-hmm. And they literally print more money to pay that debt. It's just absurd. If you had to give a loan to the government, just imagine at a bank, like and the government was small. It sounds crazy. Yeah, how am I going to pay you back? I'm going to print more money of my own money and pay you back. But Bitcoin is not that. Bitcoin is hedged because it's anti-inflationary. There's only going to be so many, and everyone is piling into it because of that reason. And as it becomes more actually useful, not just as a store of value, but in a transactional basis, as more people begin to actually use it to buy stuff, that's when it really is going to take off, because then everything's going to be denominated in dollars and also Bitcoin, euros and Bitcoin, because now you can actually buy things with Bitcoin, which is frictionless, which is easy to transfer between different continents. You don't have to pay a bank to do it. You'll get it right away. It's anonymous. It's encrypted. There's a lot of huge benefits there, and obviously there's better use cases for currencies among the altcoins. But the world is heading towards decentralized currencies, and we're seeing it now. We're seeing the world awaken to that. And again, this is very, very nascent. This is just the very, very beginning of this whole process.
But Alex, doesn't that mean that Bitcoin needs to be stable? I mean, I've got a Shift card that's tied to my Coinbase, and I wanted to spend a little crypto just so I said, so I could. So I used the debit card. I think I spent $20 or something on a meal. And I'm thinking that $20 meal a couple of years down the road, that was a $200 meal, because I spent my Bitcoin. So, if it's going to keep increasing in value, how does it become something that people actually want to use to buy things?
Well, that's the problem, right? So if you're denominating something in Bitcoin, you have to immediately sell it to convert it to fiat in order to realize the value, because if you don't, it can move against you, or in the past few months, obviously, your way. And so there has to be a little more price stability to that. And I think when Bitcoin prices mature a little bit, like maybe around that $200,000 level, which sounds crazy, but here we are. Once it starts moving more like the US dollar or the euro, where it doesn't move as dramatically throughout the day, as Bitcoin, then you'll see more of that widespread use cases for services. The other thing is obviously there'll be more platforms that are going to allow you to convert Bitcoin to fiat currency immediately upon the transaction happening. So that way you lock in the actual price. So you get your money right away.
So you see a time where Bitcoin isn't volatile? I don't know how you get there when there's such a limited supply and circulation, and the moves seem to be more dramatic than ever.
Right. So that's because it's a kind of a beginning, and you're seeing like a lot of that capital inflow now. Like you have 120 hedge funds being formed this year just to invest in Bitcoin. I think at some point it'll become a little bit more stable. We're not there yet. It's going to take a while. Eventually there will become a point where not everyone is just crazily dumping as much money as they can into Bitcoin because they're afraid to miss the rise.
In the year 2140 is when this will happen.
No, it's going to normalize sometime when it's around $1 million a coin, Joel, and it's going to be okay. It'll be a fun ride till we get there, but just hold on.
What's a Satoshi? A millionth of a Bitcoin, right? How
100 millionth of a Bitcoin, yeah.
So there you go. When it gets to 100 million, it'll be $1 for a Satoshi, and then we're going to take a long breath and be able to buy our stuff with Satoshis. I'll
tell you what. When it gets to that, I'm going to take more than a long breath. I'm going to take a long vacation. In fact, I'm going to just go buy an island and call it good.
Well deserved, but we're a long ways away from there, but it's going to happen, and I think we're all in for a very, very serious ride in the next couple of years. It's going to be very interesting.
Excellent. All right. Well, hey, we really appreciate you jumping on the Bad Crypto podcast with us. We unfortunately don't have unlimited amount of time to chat with you, but you are a real smart dude. We really appreciate you jumping on. Where can people connect with you online on the interwebs?
Awesome. Guys, thanks again for having me. It's been a pleasure. So we're over at xtrade.io, and we are launching a token sale beginning of next year. So all the information can be found there. Utility token, hard capital, all that good stuff. We are looking to solve that cryptocurrency trading problem with multiple products. We're on Facebook, we're on LinkedIn, we're on Medium, we're on Telegram. Come find us at xtrade.io, and we'll see you guys in the cryptosphere.
Fantastic. Alexander Kravets of xtrade.io. Thanks for joining us.
Thank you, guys. Have a good one. Take care.
Travis, I miss you, buddy. Please come back. Just hearing the sound of your voice makes me feel guilty for doing this show without you. Hey, whatever. We appreciate y'all listening to the show. Please do share, subscribe, tell others about the Bad Crypto Podcast, the most explosive show for all your crypto information and entertainment. And we are not financial advisors. Until next time, stay bad.
Who's bad?
The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor.